Thank you for watching this video. Today we will be doing technical analysis on the stock market for Wednesday, December 30th, 2020. And for this analysis, we will be using stockcharts.com. That is the charting service that I use and pay for, and I will leave a link to their site in the description box below this video. My name is Rodney Constable. I am a former financial advisor, a former vice president of a major mutual fund company, and I am the president and founder of Simple Market Signals at simplemarketsignals.com. We're going to start off with the S&P 500, and this is a 4-month daily candlestick chart of the S&P 500. The S&P 500 was up 13 basis points today, and we closed at 3732.04. And what we can see here is that today's close at 3732.04 is just slightly lower than the all-time closing high from just 2 days ago of 3735.36. So today's close was the second highest daily close on the S&P 500 in the history of this index. You can see that over the last 3 to 4 weeks, we've been stalling around this 3,700 level. So once we got up to this level, which was back on December 8th, okay, we've just kind of been going sideways and grinding just slightly higher, especially over the last couple of days. So it has really been kind of a slow slog in the S&P 500 since we hit this 3,700 level. So the market continues to act okay, but just a little bit lethargic, right? We're just not making a whole lot of progress, and we haven't made a whole lot of progress since we hit this 3,700 level for the first time back on December 8th. The next chart that we're going to look at is for the Dow Jones Industrial Average. This is also a 4-month daily candlestick chart of the Dow. The Dow was up 24 basis points today and closed at a new all-time closing high of 30,409.56. as we can see right here, and very similar to what we just saw on the S&P 500. The Dow has been going sideways with a slight upside trajectory since it first got above 30,000 back in late November. So it's been kind of stalling and acting lethargic for a couple weeks longer than what the S&P 500 has. Both of them are still going up. They're acting okay, but we just don't have that same upside momentum that we had earlier in the year. So as we can see, both of these major indices have been acting kind of lethargic over the last month or so. The next chart that we're going to look at is a 4-month daily candlestick chart of the IWM, which is an ETF that tracks the Russell 2000 Small Cap Index here in the U.S. And after selling off for the last 3 days, small caps acted better today. The IWM was up 1.07% today, but you can see that we have broken this uptrend line that had been in place since the end of October. And, today's price action was better, but this small cap area had been, and really still is, the strongest performing area from a capitalization point of the U.S. stock market. But if we continue to see this lethargy creep into small caps, and small caps, continue to kind of weaken and roll over, I think this could be detrimental to the overall U.S. stock market. But to the degree that small caps continue, either on a daily or weekly basis, to outperform large caps, I think that will continue to bode well for the overall U.S. stock market, because the stock markets are generally most healthy when small caps are outperforming large caps.